Imagine a financial landscape where the very institutions meant to safeguard our money are the ones harboring hidden risks. That's the bold warning Marc Lipschultz, co-CEO of Blue Owl Capital, issued this week, urging banks to scrutinize their own loan portfolios for potential cockroaches, a term famously coined by Jamie Dimon to describe lurking financial vulnerabilities. Speaking at the CAIS Alternative Investment Summit in Beverly Hills on October 15, 2025, Lipschultz mounted a passionate defense of private credit, dismissing attempts to link it to recent high-profile bankruptcies like Tricolor Holdings and First Brands Group. He labeled such associations as an odd kind of fear-mongering, emphasizing that private credit isn't witnessing a surge in defaults or corporate distress. But here's where it gets controversial. While Lipschultz deflects criticism from private credit, his remarks subtly shift the spotlight onto traditional banks, implying they might be the ones sitting on ticking time bombs. For beginners, let's break this down. Private credit involves lending by non-bank institutions, often to companies that might not qualify for traditional bank loans. It's a growing sector, but critics argue it lacks the same regulatory oversight as banks. Lipschultz's argument, however, flips the script, suggesting that banks, with their vast loan portfolios, could be the ones overlooking risks, much like Dimon's infamous cockroach analogy. And this is the part most people miss. If banks aren't rigorously auditing their loans, the next financial crisis might not come from the shadows of private credit, but from the heart of traditional banking itself. Lipschultz's comments come at a time when the financial world is hypersensitive to risk, especially after recent corporate collapses. Yet, he remains confident in the resilience of private credit, pointing to stable default rates and healthy borrower performance. But is he right to deflect all blame? Or is private credit's lack of transparency simply making it harder to spot potential issues? As we navigate this complex financial terrain, one question lingers. Are banks truly as safe as we think? Or are they hiding their own cockroaches? And what does this mean for the future of private credit? We'd love to hear your thoughts. Do you agree with Lipschultz's assessment? Or do you see a different storm brewing on the horizon?